Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your 1 p.m. market update for Thursday, the 13th of October. Well, here we are, almost halfway through the month, and it's been quite a month already. You know, the light volume rally that exceeded everyone's expectations in the equity markets has finally come to an end. We were surprised, like many traders, just how far this rally extended. However, the major trends always win out in the end, and the major trend for the equity markets, the oil market, silver market, and the Reuters Jefferies index are all still negative longer term. Once again, the long-term trends come into play and prove just how important they are in the scope of trading. You know, I see this morning that a Wall Street insider, Raj Rashmahan, was sentenced to 11 years in prison for his insider trading case. You know, I'm all for putting people behind bars that break the security laws in the United States. The security markets have no place for individuals like this. I'm also for putting incompetent politicians who waste our money behind bars. Yes, that's true. There should be consequences for their actions. When you have Senator Dick Durbin go on the Senate floor and say to everybody to pull their money out of Bank of America, that is irresponsible. It's a statement that could be very dangerous for a bank run on our fragile economy. The reason Senator Durbin said that on the Senate floor is because he cannot be prosecuted, and had he made that statement in a town hall meeting or any kind of public meeting, Bank of America could and should have sued him. You can't have politicians denigrating business who are elected officials. Unfortunately, most of these officials have zero shame and certainly would not resign over something like this. I hope you had a chance to catch our shows yesterday at 1 p.m. and again at 5 p.m. when we discussed how many markets could be under pressure today. We are seeing some markets under pressure. We'll go into that in just a moment. But here's the bottom line. Nothing has really changed. The country and the world is still in a heap of trouble, and that just can't be swept under the rug and forgotten about. Now let's go to the 6 major markets, and we track every day and see how we can create and maintain your wealth in 2011. Okay, we've talked about personal coaching. If you're interested in personal coaching, give us a call, 1-877-219-1482. Times like this, you really need to have a personal coach help you and understand what the market is doing and understand the markets in general. So give us a call. But let's go to our markets right now, and we're going to go to our first market, and that's going to be my page, and you can see right here, it's 11:43, but let's just update that. It's very easy to do. Just do the refresh button, and you'll see we're doing this live. It's going to come in around about 11:03, I guess. 11. It's still updating here. Okay, so it's just before 1 o'clock. We're doing the show, and 11:03. There's the 1:03, I should say, not 11:03. That's 2011, and the time is 1:03. So anyway, doing this live to show you that we do it live. We don't can it. And you'll see something on our front page here. If you're not a Market Club member, you should seriously think about trying our $8.95 introduction to Market Club. It's a great deal. I think you'll really enjoy it. Plus, you're entered automatically to win a free 1-year membership. But where you see right here, we are currently implementing the Australian ASX feed. That's very close to being finished. We'll tell you when that's finished. That's only for Market Club members. You're really going to enjoy that. You'll be able to see here's ASX Westpac Banking, Australian. That's the symbol for ASX, Australian Stock Exchange. And you can see Westpac has had a nice little turnaround. We can talk about that on the Australian market segment. But let's go to our regular portfolio manager, and I've done something a little bit different today. I wanted to put in a couple of things. We're going to talk about the S&P 500 as we normally do, but we're also going to be talking about the SH, which is a short ETF for shorting the S&P 500. We're also going to be talking about the SDS, which is an ultra short, which is 2 times the S&P 500. Very, very useful to know about. And one of the questions we had last night on our show, which was incredibly valuable, and I really think it shows just how ETFs work in a very interesting way. So let's go to our chart of the S&P 500, and as you can see right now, we're on the defensive. This action to me looks very negative. I think we could see this market easily come down to these terms now. Let me just put my illustrator on, and I think we could easily see this market come down to this level right here, just drawing a very straight line just across here, the 1120 area from where we are right now. We're higher on the week. Last week we closed, this is the last Friday's close, and we are higher than that, but I think potentially we could see this market come down again for the week and maybe even come under more pressure today and close down. I don't think the trend is over with. If you look at this market, these are the highs, and you're really having sort of almost a flat action for this entire period of time from August, with the one exception right here. It's been pretty much flat in the equity markets, and I think that's something you really want to see, because I think the equity markets have been unable to go down and they've been unable to go up. So you've got this sort of stalemate. But in bear markets, you don't need to have any market news. They just fall on their own weight. When people just get tired of trying to pick a bottom in this market, is absolutely crazy in my mind. You just want to let the market tell you what it wants to do. And as I say, we sat through this rally. And why did we sit through this rally? Because our monthly, and in fact, let me just move this over so I get this closer. Because our monthly, weekly trade triangles were still negative. And this is the one I want to share with you. We had a call last night with a user, and I'll put these in, and you'll see where they are. So we have the weeklies there, and he had a information that he said, let me ask you a question. I had a signal on the SH, and let's just go to that now. Let's see, this is where the weekly comes in. And look at the SH here, and you can see SH is reversed. So to short it, you see how we had a signal right here on the SH. Now, you really want to look at the indexes themselves, not so much the ETFs, because they have to be rebalanced all the time, and they can give you some false signals. So you really want to take your lead from the actual index itself. Same goes for gold, same goes for oil, and so forth. So here we are, we're looking at this market. The question was, I got to sell here. Should I take it? And the reality is, if you look at this market, it really didn't close too badly. And you also, if you go down here, you're very heavily oversold. And like the regular market, look at how the volume just kept getting lower and lower and lower. So this whole sell-off, or the rally, I should say, in the S&P 500, there was nothing there. It just didn't actually have any momentum. Now, this is the one-time one-on-one against the S&P 500. If you go to the next market, this is the SDS. This is ProShares Ultra Short. So it's 2 times. And you can see here we went below the Donchian trading channel. We did not get a signal on the spot index, the 500 index. It only came on here. And that's why you should always follow what's going on with the S&P 500 index itself, because there's no carrying charges, there's no readjustment. These are all readjusted by ProShares to match what's going on. So here we are. Every time we've been down to this level, we've had a fairly nice rally. You can see right here. And I think we're going to see this market go at least back to the 25 level. And if we just take our Donchian trade channel, excuse me, Donchian trading tool, which is right here, and we go from the highs down to the recent lows, certainly we're looking at the 24.85, which I said 25 is a rough guess, but 25.62 is a 61.8. I could see the market getting back up there without too much of a trouble. We're in a trading range pretty much in the S&P 500, bounded by around 1120 on the downside and 1220 on the upside. So let's go to our next market. We've got a lot of markets to cover today, and the next market we're going to be looking at is going to be the silver market, spot silver. And I'm taking this off here. And you can see right here the silver market really is not acting that well. Today's action is certainly very negative. We closed right here last week, and that was right around the 31.56 level with 31.58, so we're actually lower on the week. Not a good sign for silver. And as I said, longer term, if we go scope this out even further, longer term, and I'll take this over here, and we'll take some of the triangles off because it gets a lot of stuff there. Keep it very simple. Longer term, I could see this market getting back to its roots, or where it started from. And I know it sounds hard to believe, but the reality is we could certainly see this market go back to $20 an ounce, which is the long-term sort of support right around these levels here. This action here does not look that positive. If we break out to the downside, I think we could just generally just lose interest. People just get disgusted with it. Plus, you had this is almost classic chart action. You came back here, the pullback failed. It was a Fibonacci number, failed, we've come down. These are all continuation patterns to the downside. Now, silver has two roles, basically. Okay? Basically, it could be a precious metal or industrial. If you can read that, industrial. Okay, right now it looks to me it is going to be a industrial metal. If that's the case, and we're right on the equities markets going down, then you're going to see silver just come down. It looks as though you completed a pretty important cycle right here. So let's see how that plays out. Silver is different from gold, and I explained that in the blog today. So let me clear everything off the screen. And let's go to our next market, which is gold. And I'll get a closer view of this. You can see gold has really, you've got a negative engulfing line. Our trade triangles on gold are positive on the longer term. The shorter term, the intermediate term is negative, which is not necessarily a good sign. But similar pattern to silver. And we thought that the gold market would top out in the third quarter of 2011. I think we're pretty much accurate on that. I think we could see this market come down and certainly test the 1600 level and possibly even go lower than that. The market's overbought, believe it or not, based on here. We're in the middle part of the Donchian trade channel. As we've always said, when the market goes out of the channel, it tends to come back in and gravitate to the middle of the channel. Here's a good example. It gravitated, came back up to the top, gravitated, finally went down below that, and that indicated the move down. So again, we are definitely on the high side of the buy point. So I think this market's going to be on the defensive, particularly see where we close for the week. Last week we closed on a Friday. Let me just get that number for you. Last week we closed on Friday at 1637. We're currently at 1660, so we're like $23 above that. The way gold has been moving, it's been moving pretty radically, so you can certainly see something like that in the next day or two. So generally speaking, if you're not in gold, I don't see any reason to be in this market at the present time. I would just keep your powder dry and let's look for a place to either make some money on the short side or the long side. So let's give that a pass for now. Next market we're going to look at is the crude oil market. And again, the crude oil market, I still feel that we're going to see this market go lower. And the reason I say that is because our trade triangles are negative, both weekly and monthly. And also, you're sort of up the upper end of the range here. You also went to a very overbought situation. And I think we could see, just like here and here, we sort of turned down. I think this is going to push the market down again to test the 80 level. And I think depending if we close, I think I said in the blog today, if we close below 84, then we can see this market under pressure and possibly testing the 80 level in the next week or two. But generally speaking, the trend is still down, and that's the important thing to remember. We've had the recovery. We moved out of, remember this, we moved out from an oversold condition. Chances are we're going to move back to the midpoint, moved a little bit further than that, which is okay. But generally speaking, it looks as though this market is rolling over. And I'll give you a good example. If you look at just the charts themselves visually, and you see the you see here and here. So you're really going from here to here, and I think we're going to take it down. Especially if the economy gets weak, which we think it will, then you're going to see pressure come in on the crude oil. I think nobody could believe the crude oil actually got to $75 a barrel. And I think it's going to be, if we go into a deflationary spiral, which I think we're in, we're going to see more and more pressure on commodity markets. And crude oil is a commodity market, and we're trading this. We're looking and trading the December contract. So be aware of that. So let's see how it plays out. Let's go to our next market. Let's clear this off the screen. And the next market we'll be looking at, of course, is going to be the dollar index, and this is particularly interesting. I want to share this with you, so let me just get this a little bit closer. We're at the lower end of the Donchian trade channel. Now we have a plus 55, so you should know what this means by now. We have a plus 55, lower end of the trading channel. We're oversold. the market should potentially rally. Because why? We have our weekly and monthly in place. So it's saying the dollar is still very, very positive, and on the monthly trade trials and the weekly trade trials still positive. Only the ones on the daily is a little bit still soft. Okay, so we're looking for this market to improve, possibly the 78.50 area, but maybe even higher than that. But generally speaking, with the lower end of the range, we expect it to maybe regroup maybe for another day or two and then start moving higher. So let's see how that plays out. And lastly, we've taken a lot of stuff going on today. Lastly, we're going to be looking at the Reuters Jefferies Commodity Research Bureau Index. And as we said earlier in yesterday's report, we felt that the level that this market would have trouble with, and let's go a little further out, the level it would have problems with, in our opinion, was between 310 and 315. Now, we said that specifically, and this is, I think we traded around almost as high as 313 yesterday, but if you just push this line across, I'm just drawing it freehand, it comes right around from the 315 area, 315/16. So that was it didn't quite get there. Today's action, if we close, I would say below 308, I think we'll see this market come on the defensive for the next week or so. Again, we were out of the downtrend trade channel. We came back up to the midpoint, pretty close to the midpoint, and then it looks like we're failing here. So let me leave you with that thought. And the last thing I wanted to do is just clear this off the screen, is to say to you, when I first started my trading career, I made all the wrong decisions. I made all the mistakes you can possibly make. And I only was lucky enough to give a mentor to show me and teach me how to really trade successfully. And you really need that. There are no natural born traders. You have to learn the skill sets. It's kind of like people don't just become a brain surgeon overnight. They have to learn the skills to become a brain surgeon. Well, trading is no different. You have to learn the skills to become a successful trader. So that's why I'm inviting you to give us a call, 1-877-219-1482, and let some of our personal trainers help you and coach you to success. Hey, this is Adam Hewison for Market Club. Great being with you. I'll be here tomorrow at 1 o'clock and also this weekend with a weekend update. So have a great day trading, and I'll see you tomorrow.